Hi, this is PR Sundar. Welcome to pre-market report sponsored by Delta.exchange. The US Fed cut the rates by 25 basis points as expected. But yesterday in pre-market I mentioned that the Fed is expected to cut rates by 25 basis points. So that is almost sure. What matters is a comment by the Fed chairman about the future rate cuts. So exactly that is what played havoc in US markets. The Fed chairman's comment was hawkish. He said there will be fewer rate cuts going forward. So because of that, the markets crashed like anything. The Dow has fallen 1,000 points plus. Nasdaq also fell 1,000 points. Now Dow falling 1,000 points is not a big deal, but Nasdaq falling 1,000 points, and S&P 500 also fell nearly 4%. The markets are so volatile. It was not volatile. I think since the announcement of the Fed rate cut, it started falling continuously even before the Fed chairman speech. After the Fed chairman speech, it fell even more. Even even after market closed, also it fell like anything. Right? Or in the last 5-10 minutes, I can say. Last 5-10 minutes, Nasdaq has fallen, S&P 500 has fallen more than 1.5%. It was a terrible fall yesterday. Now, Dow has already fallen for 9 straight days. People thought, where it's going to fall another day. But the biggest fall has come on the 10th day. So this is how the stock market works. That's why I always say the hope is the worst enemy in stock market. So you may type gambler's fallacy, in Google. You will find some interesting story about this. So that's about gambling, but this is about stock market. Now, very significant thing is that market falling is okay, but falling so much in one day, naturally the volatility index will shoot up, but the volatility index shot up by 75% yesterday. That is unimaginable. So, people are fearing like, what happened on August 5. So that time also the big shot up like this only. Now, Asian markets are mostly down. GIFT Nifty indicating 250 points gap down. Right? This shows the risk of carrying positions ahead of bigger events like Fed meet. In fact, I would say I have made a mistake. Yesterday some of my friends were asking me, sir, is it okay to carry positions? Usually these people do straddle and strangle. So I said yes. Usually, I do not ask people, whenever people ask me, sir, can I carry positions ahead of the bigger events? I always say no. So it's not a good idea to carry positions ahead of the events. And in the worst case, you close the position, retake the same position next day, you may lose like 4 or 5 rupees premium, but at least you can avoid if there is any bigger disaster like this. But what happened yesterday, I think I became complacent for many reasons. Number one reason, we have fallen because of our own issues. So we have already fallen so much, while Nasdaq and S&P 500 hitting fresh all-time every day. But we were, about 7 to 8% already lower. So I thought, even if US markets fall, we may not fall much. So that was the first assumption. So that assumption has gone wrong. The second assumption is that technically markets are still long. The technical analysis which I'm following. But I think today that will become short. So the faith in the technical analysis. But sometimes, technical analysis may not work. So that was the second one. The third one, right? Rate cut was expected. So Fed chairman comment was also expected to be hawkish only. And because the inflation data in the recent few days were actually not good. So, hawkish comment of Fed chairman was more or less expected. I thought markets would have factored in that. No, but that was another mistake. And the fourth mistake, looking at the open interest. Yesterday, look at the open interest. Nifty closed around 24,200. 800 point up and down. 800 point away. Call option was trading around 8 rupees. 800 points down. Put option were trading below 2 rupees. So call premiums are 4 times higher than the put premiums. So because of that, I thought, the fear is actually on the higher side. That's because the markets fell recently, so fast. So the fear was actually on the higher side. But all the assumptions have gone wrong. And today it's a terrible day. 250 point gap down on an expiry day. It's going to be a big problem. But having said this, the problem may not be very big. Number one, GIFT Nifty indication may not be accurate. So GIFT Nifty in the past many times we have seen it's not very accurate. So things may change. The domestic institutions may come and put a big buy order at the opening itself to stabilize the market. So that is number one. Number two, usually what happens on an expiry day, in this kind of big gap down, those option traders will have to run for cover. So that will, accelerate the momentum on the same side. But because of this SEBI's new regulation, the 2% additional margin, extreme loss margin, we are having a triangle call and put. So you have to pay 2% extra margin for call side also, 2% extra margin for put side also. So that will take the total margin to 4%. So that will be around 25,000 rupees per lot, right? So because of that, many people stopped carrying positions for the expiry day. So that means like those people yesterday, instead of carrying position for Nifty for today, they carry positions for Sensex for tomorrow. So because today Sensex will not carry any additional margin money. So I did not sleep properly yesterday because of this Fed meeting. That's why I'm feeling so tired. So what will happen then today, end of the day, they will square up the Sensex, because if they carry for tomorrow, the higher margin will kick in. And then they will take position for Nifty next week. So this is what is being followed by many people. And moreover, yesterday also I tweeted, because of this higher margin and higher volatility, the prop desk businesses have gone down by about 50%. So because of that, even the NSE also, they said that, their trading volume has come down to 30 to 50%. So because of all these things, the problem may not be very big, but it's very, very crucial to defend 23,800, right? Number one. So this month, today will be definitely, this month's low will be broken. I'm not very sure which is the low, but last month, last expiry, that is 28th November, Nifty closed around 23,900. Okay. Then after that, there was a rally on the first trading day. So you may remember, I always say, if the Nifty falls very big on an expiry day, the first trading day, there will be a decent rally. So that reason, decent rally came on the first trading day of December. And after that, Nifty has not closed below 24,000. Now looks like, if GIFT Nifty indication is correct, we might fall even below 23,900. So overall, this is going to be a very bad trading day. The whole month, the entire month, it was very, very terrible volatile markets. So anyway, we have to carry positions. Maybe another few trading sessions. Once today's trading session is over, then there are only 4 more trading sessions. But the 4 trading sessions sometimes can be very, very big in markets, right? So all our hopes are dashed, right? So it is time to be very, very cautious on the long side and maybe some time to take some protection on the downside. So that's it for now. Hope you enjoyed watching this video. Thank you for watching.